How you guys doing? Welcome back. Today is lesson 5, the 3 analysis that I use and the 3 analysis you should be focusing on through this class. I wanted to really talk about this because we have risk management built up, we have our foundation, all the things you want to have to be successful. But probably the most tangible thing a trader can act on are these 3 analyses. You can practice these 3 anytime, any way, any shape you want to work on. So the first is technical analysis, the second is fundamental analysis, and the third is mental analysis. The crux of this course is based off this, especially technical analysis, because it's so easy to show and I'm good at it, and so I wanted to make sure I could share with you guys how to use it properly. We're talking about all the charts and stuff we're going to use, go over what you can and can't do with it. Really brief class on this today, so then we get into the actual crux of the 11 lessons on this. You know what to look out for. Same with fundamental analysis, about 5 or 6 lessons on this. We're going to talk about catalysts, what is it, how to use it, what's intrinsic value, all these kinds of things briefly today, so you know what we're talking about. And then lastly, and almost never discussed in the stock twit, fin-twit area, mental analysis. You know, there's a lot of things when it comes to fear, confidence, the mental side of trading no one ever talks about. You can't really Google mental analysis. You have to probably read books about it. And luckily for you, I've read some books, shockingly. Well, audiobooks, because I'm not good at reading or spelling, if you noticed. So we're going to discuss that today briefly as well. Again, I have to emphasize, check the description box. There's going to be a bunch of hyperlinks to books I've used, the lessons that we talk about. So if you're like, oh, he mentioned fear, I want to learn about fear, go to that video through the description box or just watch the course entirely. So with that being said, the 3 analysis, let's cover these briefly, give you guys an overview of what we're looking at into our first few lessons. With that being said, lesson 5, let's get into it. So the first thing we're going to cover with analysis is technical analysis. Now, technical analysis is going to be patterns, data, trends, prices, anything to help guide our prediction, keyword prediction, on where we think the stock price is headed and where we think it's going to be, and also where reversal areas are going to be at. So the first lesson we're going to cover with technical analysis, again, check the description box for the exact lesson, are supports and resistances. They're very easy to find. This is where, again, price action bounces off of. We'll cover this in depth, but if I were to show you a great example, we can see with PSTX, oh, well, where's the support at? Where's the price change? Oh, there and there. Those are 2 great supports right there. Whoa. And hey, look, if there's a resistance like that. Well, why is this important? Now that we know these 2 things, right? Well, because now we can find predefined risk and predefined reward, and we can plan our reversals better. Most technical analysis folks are going to kind of rely heavily on supports and resistances. Not all are that clean, but again, if you can find stocks like this, why would you trade anything else? You want to have the opportunity cost of just making things more difficult for no reason? Sure, but I think this is a very easy play. Why wouldn't you play this one over something else? Next are trend lines, or basically the diagonal version of supports and resistances. Again, it's going to help you find where a reversal may happen. The easier they are to see, the easier they are to play. For example, if I were to look at AMAT, I can see it come over here and go all the way up, and we can see plenty of bounces off this trend line right here. You can even be like, well, I think it's probably more along the lines of this. Maybe you're going from here over. Maybe the new trend line is like this. Plenty of things we can look at. And again, if you look at resistance, boop, easy resistance line. Look at supports again, easy support line right there. Boop, easy play right here. So something like AMAT has a great trend line and supports and resistances. That's going to be the bread and butter of technical analysis. Next, we'll discuss channels, and channels are really easy to understand. It's just multiple supports and resistances giving you a bunch of 100% moves. I'll say that again. Channels are produced by having support resistances that have 100% moves. Let me show you. TSM's a really easy read right now. Look, we'll put our first support right about there. Second one, probably right about here. Third one, probably right about here. And fourth one, we'll go with right about here. And then maybe a fifth one. Look at these great channels we produced here. Look at support to resistance. Resistance to support. Close. Close. And you can probably throw one in the middle here if you want to make this perfect, actually. Look at that. Support, resistance, support, resistance, support, resistance, support. All these moves, as we can see, now it's never going to be perfect. Do add more if you wanted to. Make great channels from support to resistance. Why is this important? Because if I wanted to make a risk versus reward plan, make an actual trading plan, and reflect on my goals, this is where the bread and butter and the foundation comes from. If I were to see price around, 116, I can expect hopefully at least a 2.3% move. And then again, from here up, hopefully another 2.2% move. And now we can get 1 versus 1 risk versus reward. 2 versus 1, 3 versus 1. This is going to be our foundational pieces. And you're probably thinking, well, I don't want to make 2% off a move. Sure, you may not have to or may not want to, may not fit your goals. But plenty of folks with large accounts will take 2, 3 really easy percent over some pretty risky 10 or 15%. I'll tell you what. After that, in this class, we're going to discuss volume profile. I think volume by day is fairly critical to success for some people. I don't even use it, honestly. I use volume profile, and it looks something like this. If we're going through volume profile, we can click and turn it on. It shows us volume by price instead. What do these yellow lines mean? What's this red line mean? What do these different nodes mean? Looks like a capital B, doesn't it? This looks like a capital D. Well, if the bottom, is that better? Is being the top better? What do these lines mean? We'll discuss that in this class as well. Volume profile is such a powerful tool when used correctly. Keyword, correctly. A lot of folks don't use it correctly. I'll show you how I personally use it and how I can build off of it as my main or close to my main foundational piece for supports and resistances. Next are patterns. We're going to discuss the most powerful patterns I like. Now, usually in this class, when I first start filming it, I have to go with the trend. I still believe in that. So if we're going to be bullish in the macro markets, channel ups, ascending triangles, horizontal triangles work just fine as well. I have recently really fallen back in love with falling wedges, but we're going to discuss all the patterns that we like on this channel. But there's more to technical analysis that not many folks discuss at all. Like, for example, do you specialize in anything? Think about athletes, right? Does LeBron James specialize in something? Yes, now more than most people, right? But like, how about Shaq? Shaq was really good at 3 things. Close the basket, shots, close the basket defense, and rebounds. Man ain't shooting no 3-point shots. That man ain't sprinting. That man's not passing crazy, right? He specialized in a few things. Technical analysis for a beginner should be very similar to that. And we'll discuss that later on in this course. If you're just beginning, don't trade everything. What are you doing, right? Don't just be like, I think that's a triangle. That's maybe a wedge. Is this possibly a channel? Stick to the simple stuff. Hey, horizontal wedges, easy to play. Hey, horizontal channels, easy to play. Channel ups with E-mate support, easy to play. Stop complicating it. Specialize early on, for sure. Do you know how to properly use the history of a stock? This is critical. You cannot use the history of stocks to predict the future. That's not how that works. What it can do is give you a lens to maybe volatility, volume you may see, momentum, and trend. You can't really use past price action to determine future price action. Like, oh, it triangled before, it's triangling again, it's a guaranteed breakout. Nothing in the stock market's guaranteed. Patterns and that TA are included. Now, it's important to use, but use it correctly. All this leads to our building blocks and our whole entire foundation for TA, which is convergence. Now, I think some folks use the term convergence or other things for different reasons. I made this system myself. I'm not the first person to do it, I don't think. But I made my own edge based off convergence. I have to buy stocks when support's there, when a trend line's there, when volume profile seems to be at a good value or letting us support. I want to have a clear pattern and risk versus reward is super clear. That's it. I can trade any pattern, falling wedge, rising wedge, channel up, down, sideways, up, down, skibidi-doo, I don't care. I can trade all of them because I have convergence, which I'll teach you and show you how I use effectively. And then lastly, can you spot and plan reversals? Do you know when it hits a support how much you're willing to risk based off average true range or maybe just a set number? Do you know where the reward spot is? How about when you're halfway to your goal? Do you know all these kinds of things and how to properly plan a trade? Do you know entry strategies? Do you buy off of value? Do you buy off of a crossover? Do you buy off of scaling in? Do you leave a stock based off the same exact reasons? Who knows? All that will be described. Check the description box for those lessons. But again, watch in full. That's technical analysis in a nutshell for this course. So next is fundamental analysis. Now, fundamental analysis to me is how you can determine a stock's value and how we can find fair value and determine what's a good or bad deal based off of things like balance sheets, accounting, and basically your qualitative and quantitative research. What tangible things does it show? What non-tangible things does this company show you? And does it equal a good value or a bad value? What we're going to discuss some of the real basics of fundamental analysis. We're going to talk about how to use price targets, how to use analysts. We're going to talk about catalysts, all these types of things. Do you know how to properly trade a catalyst? Do you know how to ride momentum? Do you know how to spot one before it happens and buy into value and ride it up? Have you ever discussed world events? Have you ever thought about politicians buying something? How about the government interference? Have you ever thought about news breaks or Twitter accounts you want to watch? Especially in crypto, that has a huge deal with it right now with how, the feds are talking about it with taxes and such. But do you watch catalysts carefully? We'll discuss that. Do you understand what a PE ratio is and what earnings per share is? You're gonna find out. Do you know what gross margin is? Do you know what ROAE and I are? Do you ever wonder about what's a negative PE and why does that matter? How do you find intrinsic value? Because if a stock's worth 20 bucks but trading at 10 and it goes to 9, should I be excited or worried? Well, probably excited, honestly. And we're gonna talk all about those kinds of numbers that I use. Again, we keep it very simple. I don't change variables. I like to keep the same exact variables all the time. That's the key difference between me and a lot of people is I don't go search for every little tidbit. I also specialize in fundamentals, right? I'm not gonna go out there and be like, oh, I see this great article, let me just change my whole strategy for this one trade. No. No, it's the same exact thing over and over again, right? And then lastly, we're going to discuss the broader markets such as the business cycle, inflation, GDP ratios. How do global markets affect this? In fact, can I watch Frankfurt, Japan, London? Can I watch other markets for an indicator for the next day? You certainly can. We'll discuss that as well. Again, description box. And lastly, what is fundamental analysis? Now, this is the understanding of the mental edge, the psychology, and not how people operate, but more importantly, how do you operate as a trader? Do you know your own risk management policy enough to know when you should or should not take on a trade? That's critical, right? Do you understand the investor mindset? Do you have the issue? And I think a lot of beginners have this, and tell me if I'm wrong. You treat trading like a job. You have that employee mindset, baby, it's okay. You come into this and you're like, all right, my whole life I've worked 40 hours, I gotta work 40 hours in the stock market. Don't work that way, no sir. You have to go from being an employee to a small business investor mindset into a full investor mindset. The best trade you can take sometimes is none. Cash is definitely a position, and the more you take, the less detail you can apply to each one, and the more trades does not equal more profit all the time. You have to have the investor mindset. We'll discuss that as well. Do you fully understand your own trading structure and your own trading system? Does it actually operate to you having less fear or more fear? Fear-based decisions ruin careers. Off the bat, off rip. If you make a fear-based decision 2 weeks later, you're like, damn it, I knew it. And you still did it, right? So we'll discuss fear and how fear should be viewed through the lens of it being a bridge with no handrails over a big old canyon. Would you walk down a canyon with no handrails of a bridge that's this wide? Yeah, probably not. But you had a trading plan? Make it a little bit bigger. Hey, good TA. Make it a bit bigger. Let me zoom out. Hey, this is a really good fundamental stock. Make it a bit bigger. Would you feel comfortable crossing a canyon with a 30-foot bridge with no rails? Yeah. 2 feet? Not so much. That's fear. We'll conquer it together. Do you understand the power of thinking in probabilities with the expectations that you set, not the market? You can have predefined expectations, and you play the probabilities, you win, you lose. Meh. Do you get mad at a coin toss? Probably not. And if you do, calm down, it's not that serious. Do you know how to even define the risk we've been discussing so in depth? For me, risk is what I pay to see if I was right. It's that simple. It's like an option contract. You're ready to play an option, it's a $15 premium. That's just like risk in the stock market with buying equity. Same exact idea. We'll discuss how to properly internalize and accept risk in this class. And then with that being said, what are the objectives? Why did I even take this trade? Why did I even enter the market in the first place? We'll make sure your objectives are clear and that the truth is clear. This all leads to consistency. These three analysis, technical, fundamental, and mental, are part of your edge and your rigid rules that leads to consistency. No one hates inconsistency. If you ever played sports, your coach hates nothing more than inconsistencies. They want to know what they're going to get out of you every single time. The same with your system, the same with your structure. Again, your trading system can change. As market conditions change, your strategy should also change. I haven't played a falling wedge from November 20th, 2020 until about 2 months ago because the market had no room for them in my opinion. I had no reason. With the kind of choppiness I'm seeing, yeah, day likes again. These are great consolidation plays. I've changed my strategy. The rules I apply to that new pattern I'm using do not change, right? You can do whatever you want when it comes to your strategy, but the rigid rules must stay the same. Your trading strategy should change as market conditions change, but throwing out the rigid rules makes no sense, and beyond this point should never happen. You have the same rigid rules. Technical, mental, and fundamental analysis follow those same exact rules. So with that being said, check the description box for those classes in order of where you want to find. If you want to skip something, go ahead, but those are in the description box. Let's move on to scanning. I think scanning is going to be a pretty fun class. I have 25-30 scanners I want to go through quickly, and I can spend all day on this because you can go in the description box out there and get all the scanners myself. I've gone over Reddit, I've gone over my friends, my own, whatever it is. Plenty of scanners coming to you. The mental analysis behind scanning up next. So when we go through lessons 9 through like 50 that have actual stuff you can apply, you can scan properly to make the correct and good decisions. That's what's key, is that if we're gonna do this class the right way, I want you to be able to find the stocks you like and add new stuff to your portfolio without having to find crap stocks. Because you have crap stocks anyways, you can't scan properly. You may have the best TA, but if you can't find the quality in the first place, it means nothing. So with that being said, lesson 6, scanning. Let's get into it.